Hey everybody, this is Dale Anderson from Fabrik Invest. I hope you're keeping well on this beautiful Friday. Just wanted to quickly update you on what Zoopla is saying about the housing market. So what's going to happen to the housing market in 2023? So what they're actually saying at the moment is that, will mortgage rates rise or fall? Will house prices remain stable? And is negative equity a real concern? You can get the latest with the house price index. I'll drop the link below in the description. But the key takeaways is number one, mortgage rates look to set to return to 4 to 5% next year. And these rates are set to become the norm in the future. The days of ultra cheap money, forget about it, it's behind us. Number two, the pandemic and the cost of living factors will continue to drive the search for new homes in 2023. And number three, a 5% fall in house prices next year would see the most of the market's current overvaluation really reversed by December 2023. So don't forget, prices have gone up 20% since the start of COVID, so it's sort of artificial inflation really. So they sort of a market correction in my opinion. So I do agree with Zoopla on that. Mortgage rates look set to fall in 2023. Events are moving fast in the world of politics and the financial markets. On balance, we believe that mortgage rates will start to decline before the start of 2023. So that's good news. And this decline will continue into next year. There are signs that money markets are already adjusting to a changing political outlook where stability in the UK's public finances is an imperative. The big unknown remains how much further central banks need to move on interest rates to bring inflation under control. So a recent speech from the Bank of England suggested markets were overestimating how much higher interest rates will rise, but only time will tell. What is clear is that mortgage rates are not going to return to the ultra low levels that we've seen in recent years. So home buyers need to realize that mortgage rates are going to be 4 to 5%, set to become the norm moving forward. So you've got to do that stress test to make sure your property, your buy-to-let, is still cash flow positive. Spike in mortgage rates delivers a quick reality check for home buyers. Many home buyers are continuing with their agreed purchases. Others did not expect to be buying with mortgage rates 3 times higher than they were at the beginning of the year. And are sitting it out for the rest of 2022. That said, the broader motivations to move homes will remain in the next year. These searches will largely be supported by pandemic factors, including the need for more space, home offices, as well as cost of living pressures, including the need for homes that are cheaper to heat and run. The energy playing a big factor. For many households, a move will come down to what they can get for their current home and what this value unlocks for their next home. So our house prices are set to fall in 2023. Any price reductions will come out of the equity for most households, but it can take time before everyone who wants to move accepts these pricing adjustments. However, we expect this adjustment process will be quicker than normal given the step change in the outlook and the scale of recent price gains. Just to sort of quickly share some of that with you. I'll share screen and just show you the chart that Zoopla has produced. So negative equity, is it something to worry about? What is negative equity? These are good things you need to understand and questions you need to ask. Short-term overvaluation of house prices due to unfold over 2023. So as you can see here, this is since 1982, and you've got, under overvaluation of house prices, where prices have peaked and then come down again, and then going into 2006, prices went up again, and then we had the crash of 08-09 where prices came down, and then, throughout 2012, 15 and beyond, they were fairly stable, but again, we've seen a sort of overvaluation in the last 2 years during COVID, and we expect that pricing to, so the overvaluation to stabilize. So good news for buyers. There will be more motivated sellers offering discounts. Really, house prices were slightly overvalued in my opinion. So relative overvaluation reduces, assuming mortgage rates decline to 4% and house prices fall 5% over in 2023. So lots going on there in the housing market. How will this hit the buying power affect the market in 2023? The housing market in 2023 mainly looks set to be on course for readjustment as we return to normal levels of mortgage rates, and a rapid reversal in mortgage rates would have the greatest impact on buying power, enabling buyers to, but basically if it's a modest decline in house prices did take place, the desire to buy could actually be further accelerated. So we could be heading for a buyer's market. So great opportunities around. If there's anything in specific you're looking for, we've got access to a wide range of investments, both off-plan, new build, where developers may be more motivated to do good deals. And then we've also got HMOs, freeholds, various buy-to-let options, both active and passive. Active being more involvement, maybe it needs refurbishment or older house that you can add value to, things like HMOs. But yeah, the primary business we do is also the fully managed passive investments, new build, good energy performance, all the latest mod tech sort of specifications and things like that. So if you enjoyed that news, click the subscribe button. We'll be keeping you fully up to date. We've got some free guides to give away to update you on the market. Take care and have a great weekend. Thanks.